Hi, and welcome to Ones and Tooze, FP's economics podcast. Every week we take a couple data points, use them to try to explain the world. I'm Cameron Abadi, FP's deputy editor, with you in Berlin, Germany. As always, FP's economics columnist and Columbia University professor Adam Tooze is with us this week in China. Hi, Adam.
Hi, Cam.
So we have one segment for you all this week, and the data point there is $57.5 billion. That is the estimated size of the global art market. A pretty stunning figure, I would say, $57.5 billion. But it actually represents a decline from the previous year, a decline of about 12%. Apparently, the high end of the art market is dragging the entire market down a bit at the moment, but still a sizable part of the global economy. And Adam, it's a part of the economy you follow yourself. You were at Art Basel this past year, the big international art fair. Is that right?
Yes, it was. Yeah.
So yeah, in some sense, it sort of surprised me that we haven't actually talked about the art market yet. But what better time than now? And if we were to start off with just by kind of taking apart that figure and its component parts, there is obviously a primary art market where art is sold from the first time after being made by artists, and then a sizable secondary art market where it's sold after that initial purchase. And I'm curious which of those markets is bigger. And then obviously this entire segment so far I've been using the term market, but it does seem a pretty remarkable thing about the art market that there's all sorts of secrecy involved in it, lack of transparency over prices, even buyers. These are factors that I think would typically be described as necessary parts of a functioning market. So, I mean, are these art markets at all?
Yeah. So, the whole thing, just for sake of argument, is $57-60 billion. It's a little hard to estimate because it's, as you say, opaque and it's multifaceted. The difference between the two markets is, yes, that around 45% of that total is the so-called primary market. And this is overwhelmingly dominated by galleries. Some platforms now where artists sell art, but most effectively within those platforms, artists are represented by galleries. So that's, if you go down, any fancy town, go downtown, there'll be a gallery district and you'll see these galleries. And they maybe have 10, 20 paintings, pictures, sculptures by 2 or 3 artists at any given moment. Maybe they'll have a show, and these are artists the galleries represent. So these are galleries talent spot artists at an early stage in their career, ideally, and adopt them and then sign contracts where the gallery represents the artists worldwide or in a particular geography, and then galleries will join together to represent an artist across many different continents. And these are the artists who are going to break out onto the main stage. There's a few thousand people that are represented at the very top level by the biggest galleries. The largest galleries of all, the Gagosians, the Paces, they have turnovers of $1 billion plus a year. I mean, in the case of a Gagosian. So that's the gallery side. Slightly more than half of the market is what folks might conventionally think of as the art market, which is the space of the big auctions. Sometimes makes the headlines, like a Picasso goes up for auction, a Cézanne, a Van Gogh at Sotheby's or Christie's or one of these big global auction houses, hammers for $50 million or whatever. That element of the market is the so-called secondary market. And it's done at auction because the things being sold have track record, right? The idea of the primary market is that galleries discover talent and bring it, and it needs the support. A Warhol is essentially a commodity. There are thousands of them, and you can place a Warhol in a galaxy of other Warhols. And so when one comes up for auction at Sotheby's, if it's a Campbell soup can or whatever from Warhol, we know how to value it as opposed to other valuations that have been achieved. The auction element is the most transparent element of this market, and it's about $12 billion. So if you do the math on this, the galleries dominate the vast majority of the market, and roughly half of what they do is new business, and then roughly 40% or so is reselling through galleries, and then there is this element which is the auctioned element. And for that, since 1989, thanks to a outfit called ArtNet, we actually do have fairly good data. And the data has had the effect not necessarily of calming the market down, but of almost commodifying the market more starkly, because all of a sudden, like I was saying, for genres of Warhols, you can actually establish something like a going price. I cite Warhol because he's actually, I think, the most widely traded historically contemporary, or he would be called contemporary artist, so post-45 artist, whereas a modern artist would be a Picasso or a Braque, painting in the early 20th century. And so in those markets, we do actually have a fair degree, the auction market has a fair degree of transparency, but transparency by itself doesn't necessarily calm things down. It actually creates a kind of excitement and a buzz and momentum around these assets.
So, obviously you use the word assets, and there's so much value associated with artworks that they're entangled with financial markets. And one interesting fact that I came across is that artworks are increasingly serving as collateral for loans. And again, I'm curious, given, the lack of transparency in terms of prices, even ownership in some cases about artworks, how is it possible for the people making these loans to even do any due diligence? I mean, what are the kind of financial risks involved in art markets on this level?
I mean, the analogy here will be to something that in the finance business is called like private credit, for instance, which are loans organized off the books outside conventional channels, which are not sold into public debt markets, where after all, quite a lot of debt is actually traded over the counter. If you want to invest in very high risk bonds, there's no general market for them. They're provided to you by various intermediaries who will offer you very good rates of return in exchange for the risks. And so it's not surprising that it takes expertise, and that expertise commands a premium. And so people earn money offering the expertise necessary to value a piece of work and to secure it as collateral against loans. And it is indeed big business. I mean, barely incredibly large business. According to Deloitte's Art and Finance Report of 2023, there could be as much as $40 billion worth of debt secured on art globally, which is a lot of money by any standards, but is modest by the standards of the overall scale of private credit, private equity, these off-market channels for investment that say a lot of university endowments are invested in private equity deals of various types, which never hit the market, which are valued by inside expertise and then show up as the endowment. And as long as they continue to generate a return, no one asks any questions, and so they never actually have to be marked to market or tested in that way. And from the point of view of the extremely wealthy people who are buying the highest value pieces of art, this is a perfectly normal balance sheet operation. I mean, it's an open secret that the wealthiest people in the world don't, when they own real estate, for instance, generally speaking, don't buy it with cash, but basically take out interest-only mortgages. And so if your net worth is $1 billion, then you'd be crazy not for various types of tax optimization strategy, for liquidity management purposes, to have hundreds of millions of dollars in debt on your balance sheet, because you're just portfolio optimizing in the same way as any business would. And a $1 billion turnover business is not going to pay for all its raw materials up front. It borrows money to buy the raw materials, to produce the stuff to sell. If you're managing a portfolio, you don't necessarily have the money to buy the bonds you invest in. You buy the bonds, you repo them, which means you basically raise finance by passing them to somebody else, and you trade on the margin. And in the same way, very large investors in art will not put up their own personal piggy bank of money for doing it. They'll simply say, I think I would quite like this year to put $50 million into art objects. And Sotheby's or the big auction houses will offer you financing to buy the goods. And this is not just for art. I mean, if you follow, like I do, the YouTubing community that does very high end, supercars and hypercars, the people who own Lamborghinis and Ferraris and Bugattis, more often than not, don't actually pay with cash. They finance them. And then they have bills running into the tens of thousands of dollars, which are essentially lease payments on the vehicles they're driving. And because driving the vehicles is part of their business, it's tax deductible. It becomes part of a portfolio balancing operation. And in the meantime, you have this amazing car, which you would never, you wouldn't want to invest in it necessarily because it depreciates. So instead, you hold a loan and you finance it that way. So it's not as, it seems freaky, but in fact, once you end up on this level of wealth, it's a fairly common practice. It's worth saying, however, that this applies only to the very high end of the marketplace. The average artwork, I think, sold in the United States sells for a comparatively modest $25,000. And those will, on the whole, be being financed by, people paying out of Christmas bonuses or whatever gives them the feeling of having free cash. It's not something that you would necessarily finance through a loan. It's when you're in this super league of assembling a private collection of 20 or 30 masterpieces priced in the $10 million range that people will start considering this kind of mode of finance.
Yeah, and it is another fact about the market on this very high level that the works being sold and bought may not ever be displayed. Their possession is being acquired and then they're being stashed away, and then even when they're sold again, they're being moved from one storage space to another without either the buyer or seller even laying eyes on it potentially. I guess presumably also if those loans need to be unwound and someone needs to take possession of these artworks as the collateral, that may also be the case. But in reading about this, it seems to be a fascinating role that free ports play. And I'm curious what role exactly those free ports are playing in the international art market.
Yeah, this was something that you really alerted me to. It's an absolutely fascinating role, but it goes back exactly as you were saying to the weird role of art as asset. It's a little bit like with gold bars. If you're in the business of owning a gold bar, you generally don't keep the gold bar at home because it's very hard to ensure you'd worry about it all the time. And what are you going to do with the gold bar at home? And so you keep it in a deposit account somewhere. So as a depository, there'll be banks in New York and London that will happily hold your gold bar for you. And in this case, the same thing is true for art, because when art crosses borders, it incurs various types of tax and customs obligation. And of course, it's a huge insurance risk as well. If you display it anywhere, you have to come up with exorbitant insurance premiums just to put it on a wall. And so instead, a very large part of the art that's bought for investment is stored in free ports. And the largest of all is in Geneva, perhaps unsurprisingly. It's basically a Swiss tax haven. And it's believed that the free port in Geneva has a stock of over 1 million works of art, including 1,000 Picassos, valued at $100 billion. The art alone. So it's just this, apparently by all accounts, this nondescript warehouse facility, perfectly conditioned. It's also the largest stock of fine wine in the world. Millions of bottles of fine wine, notably Bordeaux, are stored there, again in perfect condition. And it serves essentially as a kind of, it literally is the Donald Duck pile of gold coins, which sits in a warehouse in Switzerland, where all of these valuable objects are stored. It's a sitting duck, you would think, for crime of various types. And the most serious types of crime, which apparently are conducted through the free port there, are basically various types of thefts of antiquities. So art that was looted from Italy and that was looted from the Middle East has been sluiced into the free port, where it can then be laundered in various ways through forged certificates of export. And that then enables it to enter circulation as a legitimate archaeological finds. So it's an extraordinary kind of black hole in the global financial and cultural system, if you like. 1,000 Picassos.
Yeah. How is that being secured? Are there what? I mean, it sounds like it should have its own military.
Switzerland. Who knows? They
maybe those guards at the Vatican. Yeah. And then in terms of its legal jurisdiction, it is technically under the Swiss, but it's a free. It's not otherwise legally. It's outside.
There's no tax due. So there are other free ports like this. There's one in Singapore. There's one in Hong Kong to cater to the. I mean, Hong Kong is one giant free port. So these depositories have proliferated around the world. It's striking that they don't choose jurisdictions like the US, because in the end, you wouldn't want to be dealing with a rampaging DOJ coming after you. You go somewhere where there's order, but the risks of a sort of sovereign intervention are relatively slight.
Okay, we're going to take a quick break here, but we'll be back in a second to continue talking about the global art market. So to get back to the artworks themselves and how prices get attached to them in these art markets, I mean, is value in art markets, ultimately determined by some sense of connoisseurship, or is it primarily financial speculation that's playing a role in setting prices on this upper level? And how would we know the difference in the first place?
It's not easy to do because there's always a mix of motives. And a kind of classic route into this problem is just simply to ask people who buy art why they do it. Very few of them, roughly 10 to 20%, will just frankly admit they're doing it for the money. The vast majority of people insist that there's some connoisseurship element. And this is one of the extraordinary things that you see when you go around a show like Art Basel, is this weird mixture of overt commercialism with genuine appreciation. And it's really very difficult, even on the spot at the time, to figure out what's going on. You can get into conversations. I like going in part because it's an opportunity to chat with art dealers about the art. Sometimes they're knowledgeable. Often they're shockingly not knowledgeable about the material that they're trading. It's interesting to see how long it takes them to tell you, oh, well, this will be a good moment to pick this up. It's recently been shown here. It's recently been shown there. We think it's getting good prices. It doesn't come up immediately in the majority of conversations. Maybe I'm not the kind of person that attracts the idea that I'm going to put down a huge amount of money. But there are ways of testing this. One is fractional ownership. People may have seen this advertised on social media, that there are funds that you can invest in where you buy a slice of a piece of art. So there are hundreds of millions of dollars in this now, where if you're interested in speculating on the art market, you can basically, it's like an ETF for art, and it will invest in contemporary art, so an exchange traded fund, and it will expose you to, and the idea here is exposure, the upside risk of art increasing in value. You don't ever get to take the picture home or put it on your wall, but you have some fractional share of its value. So that's an indication, and those have been growing. They're a very small part in all total of the market. What's even more striking, and this is a stronger quantitative indicator, is the so-called phenomenon of the wet paint auction. So this goes back to your original question about the difference between the primary and the secondary market. So the idea, the conceit behind the primary and the secondary market is that new artists are discovered in the primary market. Over decades, the appreciation of their work develops and the work matures. And then at some point, when they've become classic, the work is sold at in the secondary auction market. So you go from being, the poor and starving Picasso to being the millionaire, globe-trotting art hero. And that's the difference between the primary market stage and the secondary market stage. And there's been a remarkable surge in the recent years, the last 4 or 5 years, in what's called wet paint auctions. So the classic assumption is that by the time works of art get to the secondary market, to the auction market, the paint's dried, thoroughly dried. But what we've seen in the last couple of years, since the early 2020s, is a surge, a doubling in the number of artworks which are brought to auction, so move from the primary to the secondary market within less than 2 years. So what that's telling us is that folks are not buying the art and holding it, as you would expect a connoisseur to do, but buying the art and flipping it. And this is all the more pronounced amongst ultra-contemporary artists, so really people born since the mid-70s. And the most fashionable of those are people like Banksy, who are graffiti-based artists. So it's the conjunction of the sudden surge in flipping and the fact that this flipping is concentrated above all in the most contemporary artists and those who are closest, if you like, to pop culture, that suggests a kind of memification of the art market and a surge in speculative buying above all amongst the younger investors. There's a sort of crossover here between the crypto space, the NFT space, and the more conventional art market, which suggests a surge in more speculative activity. The only classic player that has really participated in this is David Hockney, the incredibly enduring British artist who started in the age of pop and is still going strong in this new age of much more speculative art investment.
Yeah, it does seem to me that even when everyone knows that what's going on is some level of speculation, that there's still this apparatus of connoisseurship around it, and it's plausible that both of these elements are happening in the market at the same time. But there's these efforts to place any given artwork in some kind of historical context, even in instances where that may be irrelevant to actually what's going on. But I did want to ask about the role that museums play in this market, because it does seem to me a kind of distinct one. I mean, on one hand, museums are standing outside the art market very concertedly. So, they're repositories of the public good in some ways. And at the same time, they seem to be, though, entirely enmeshed in the art market. I mean, because artworks rely on museums to gain value in some ways, as far as I understand. I mean, they're basically, when artists are included in museum collections, the artworks as a whole of those artists are increase in value. And I mean, they maybe museums allow artworks to escape the market logic, but only when they exit those museums again, they exit them at a higher value. And so what role are museums playing in this art market, and what connects them? Is it the collectors themselves who are kind of connecting museums to the art market?
So you might think that museums are big buyers of art, and that really is an illusion. The most reliable art market statistics that we have put the share of museum purchases at less than 5% in even a good year. I looked at the budget for the Museum of Modern Art in New York, for instance, MoMA, that you might expect to be a major player in contemporary art markets, and it can't be. I mean, in 2022, it spent $17 million on acquisitions. In 23, it spent $25 million. So that's one or two major pieces at prevailing prices. It received gifts of $50 million, worth $50 million in 2023. So that's four major pieces at a pinch. It has 200,000 in its existing collection, 3,600 of which are paintings and sculptures. So it's making very incremental additions to its collection with budgets which are tiny by comparison with prevailing prices and the overall flow of the art market. So it isn't through their buying power that museums matter. It is, exactly as you say, through their ability to exhibit and to curate. And in that respect, they really do make a very substantial difference indeed. And we can look at this through statistical estimates. So there's a bunch of econometric evidence on this, which shows that exhibitions in museum raise average prices by 20 to 30%, once controlling for how well known the artist is to start with. And then there are really remarkable instances of promotion of individual and new artists. Jean-Michel Basquiat is one particularly striking instance who saw a huge surge in the value of the pieces once there was a show of his work at the Fondation Louis Vuitton with an untitled piece from 82 going for $110 million in 2017, so a huge leap. Cecily Brown is another artist whose recent fame has been launched by museums, and Mark Bradford, who saw a giant leap in the valuation of his work after featuring in the Venice Biennale and at the Whitney Museum in New York. So there are definitely moments like this, and it's clear also that galleries play a role in manipulating the market. It's long been rumored that Gagosian uses its giant stock of Warhols to stabilize the market for Warhols. It acts as a kind of buyer of last resort. It's known also to have intervened in the market for Matisse and Ferruccia. Gagosian is thought to hold inventories of art running into the hundreds of millions, perhaps even more. So there's a degree in which the galleries, the individual artists, and the museum are acting as a network to sustain the value of the objects, with the principal role of the museum being a kind of credentialing.
Yeah, that makes sense. I mean, it sounds like there's a lot at stake when an artist gets exhibited at a museum or added to the collection of a museum. So I guess it's only predictable that there would be attempts to manipulate what's happening there, even if the public doesn't know that. And I guess this leads to my last question, which is, the ways that artworks act as financial assets, and the way we're talking about them, it strikes me that they are not just financial assets, but also like significantly less regulated than other comparable assets like securities or stocks. I mean, like, there are all sorts of levels of collusion or, manipulation that could be going on that are, they may be unethical, but they're, I guess, perfectly legal, in this art market. And I'm curious if at all you think this economic logic at work in the art market also itself flows back into aesthetics. As a result of this, does art tend towards some aestheticization of finance ultimately? And you mentioned earlier NFTs as this kind of speculative object. It strikes me that in some ways that's almost a kind of expression of this kind of financial logic in an aesthetic form. I mean, almost a kind of like digital asset that's basically exists only to be traded. In a way, it's almost like a kind of like aesthetic purification of exchange logic. I mean, I don't know if there's something to that, or what do you make about this kind of relationship between aesthetics and this kind of financial logic?
Yeah, I think art has, in the modern period at least, been perpetually interested in this question. There's a whole bunch of people in the 60s in the pop art movement that produced paintings that celebrated the dollar bill. So there's a $1 bill series by Warhol from the early 60s. There is a Roy Lichtenstein picture, Crying Girl with Money, from 63, which features the $100 bill. Wesselmann, Robert Dowd did this whole series known as the US currency paintings, which are depictions of the US banknote as a subject. In the Whitney, in its biennials, has regularly featured work quite recently that addressed the financial crisis as a aesthetic project. But I agree with you that in some sense the non-fungible tokens, I mean, they're a reduction in both directions, right? Because by any conventional norm, they're devoid of aesthetic value, and they're also empty of any financial significance, and yet they emerged briefly, at least, as a significant slice of the art market. The aesthetic component has really collapsed, and the stuff that presented itself as art has really been a bubble that burst. But the collectibles element has proved reasonably resilient. And categories like the CryptoPunks, which are these weird pixelated heads, are still selling at $120,000 each in 2024. And there was a kind of hope of a revival in the new era of the crypto presidency under Donald Trump. So they haven't gone away, but as you're saying, I think even in the radically commercialized world of modern art, in which people accumulate Warhols essentially in a numbered fashion, and thousands of Picassos sit in a warehouse in Switzerland, the NFT phenomenon, was exploring the limits of the commodification and the aesthetic side, because they are such minimal statements, really, in both respects. And yet, in the right speculative conditions, command value are traded back and forth, and for a while were billions of dollars worth of business.
Yeah, I mean, in some sense, it seems to me where by assuming the commodity form in its purest sense, there's a kind of aesthetics associated with that. It just has nothing to do with any sense of tradition or connoisseurship. But I guess if there's a kind of new class of collectors who have no interest in the kind of hierarchies associated with connoisseurship. There is, it does. I wouldn't say there's no aesthetics associated with it. It's just it's an aesthetics of exchange somehow. I don't know, but
I take your point. I mean, to say there's no connoisseurship again is perhaps to let snobbery get the better of oneself. Like, I mean, the people who like these things clearly appreciate these CryptoPunk figures in ways I find personally incredibly difficult to relate to, and it's very difficult to see how one draws the line, especially against the backdrop of what else passes for contemporary art in many cases.
Yeah, I guess the question is, like, does coding have an aesthetics? I mean, like, is there a kind of connoisseurship of code, if not, traditional art? But anyway, I think we need to end the conversation here for now. But I'm glad we finally got to the topic of the art market. We'll be back next week. Ones and Tooze is written and edited by Adam and me and produced by Claudia Tatey. The show is made possible through the support of foreign policy readers and Ones and Tooze listeners, including Mustafa Sahid, Ben Wood, Gen Gillespie, Kevin Quigley, David Durr, Eric Sabeta, Marius Roth, and Uwe. I do hope I pronounced those names right. Apologies if I did not. As always, we love getting listener feedback. You can leave voice messages on the Ones and Tooze homepage on foreignpolicy.com or email us. That's podcast@foreignpolicy.com, or you can tweet us. That's @onesandtwospod. I'm Cameron Abadi. Thanks very much for listening, and we'll be back in your feed next week.